In this special highlight episode of the Aerospace Executive Podcast, we're revisiting top insights from some of the guests featured on the show this year. From the ongoing aircraft shortage to turning a 60-year-old company into a market leader, find out how the industry's powerhouse organizations maintain a competitive edge in a volatile market. Let's dive in.
So we're not really, we don't, we're not product focused by any means in terms of aircraft that we're going after, engines that we're going after. To me, it goes back to what I learned, started learning my second week in the business as a sales assistant. And it's all about the patterns and the patterns that make an HBT blade an attractive part. They also make a transceiver an attractive part, or they make something, a non-attractive part that doesn't have any value. So for us, we're out looking at every deal, every opportunity. We've purchased aircraft, ATR 72s with engines, all the way up through A380s with engines, and literally every commercial aircraft in between. So for us, being product focused would really pigeonhole us into chasing deals that we might not like if in a market we think gets overheated or becomes super challenging. Maybe you're only winning 1 out of 20 bids on a challenging product type, but on a less challenging product type that's not as competitive, maybe we're winning 1 out of 2 bids or 1 out of 3 bids. And the fact that we're able to go after everything and look at everything kind of agnostically, that's really been a huge driver of growth for us. If we were only in the CFM 5670 market, yeah, that's the hottest stuff. It's the best material. It's the easiest to move, but it's also the most competitive and it's the most challenging to win bids on. So I would say if we're bidding on a 7B, we're winning 1 out of 20. But if we're bidding on an A380, we're winning every other A380 that we try to buy, or every third A380, because it's such a weird niche product and it's very expensive to disassemble and it's unwieldy. They're just tough. They're tough products to deal with. But in those products, if you've built out your supply chain and you're looking at things in the right way, you can find a lot of value to them over time if you are, looking at risk appropriately.
Yeah, what's interesting, word on the street is, and you tell me if it's true or not. What are the successes? What are the major successes of the companies that you look personally at every deal?
I look at, in terms of an asset acquisition, I'm 100% looking at every deal. But even more than that, I'm looking at almost every sales order that goes out the door of the company. I'm looking at almost every line item of inventory that comes into the company. So per day, that could be 500 line items of inventory coming in. And it could be, there's hundreds on an average day. We'll see 100 sales orders, and they often have multiple lines on them. And I'm definitely watching them like a hawk almost every day. And if I'm not watching it, then one of my other top guys is watching it, very intently. So there's not much that slips by here. We're not, giving parts away, or we're not overpricing or underpricing. We try to be right where we need to be to keep things moving while also maximizing our ability to generate margin. So yes, I'm very, very locked into the business. There's an underlying narrative, a hypothesis that I have that I think is going to really play out here. And I'm not sure that the rest of the industry is really, understands it, assuming I'm right, the way that I think that I believe, the way that I think things are going to play out. So if right now everybody knows about the supply chain issues and engine manufacturers are having problems delivering aircraft and the geared turbofan and Boeing, the door and the Max and everything else, and the 787. But I think that the general consensus is that, it's going to clear up in the next 2 years, 3 years, it'll clear up, and that we might be in a bubble right now. And, the bubble is going to pop and things will go back to normal. I don't agree with that at all. I think that there is a long term supply shortage of aircraft. And so if you look at Boeing's commercial aircraft forecast in 2016, they expected 20 years later for there to be 40,000 commercial aircraft needed by the global fleet to support cargo and passenger operations. And so let's assume that that number is correct. 2019, the MAX issue happens. Boeing delivers half as many narrow bodies as they expected in 2019. They're making planes, but they're sitting on the ground. They're not being delivered. And then they stop production. 2020, the lockdowns start. Boeing and Airbus deliver very few aircraft. 21, same thing. 22, they restart building aircraft again. Now we're 2 years after the lockdowns really ended, and we're still significantly below production rates that were expected in 2016 by Boeing and Airbus because of all the issues that are ongoing. And so we're say that people are right and that the supply chains do normalize in 2 or 3 years and aircraft deliveries come back to normal. Say that happens. Okay, fine. Even if that happens, you're going to have had 8 years where you've had production fall significantly short of what was expected to be demanded by the global fleet. So what does that mean? That means that if you have an 8-year issue and you're 20 or 30% below what should have been made, those planes are never going to be made. They're never going to exist. You can't just increase production. You're going to have a long-term supply shortage. So where in my short business career have I seen something similar? We saw something similar happen in 2008 with real estate. So real estate collapses in 2008. You can't get lending. Nobody's building anything. And there's very, very little building going on for 2008 through 2012. There's 5 years of very little building. Building an apartment building or an industrial building is much, much easier than building an aircraft. And so what happened from 2013 through now in the real estate market globally, you've seen prices go through the roof. And in my opinion, it's not really because of interest rates or anything like that. It's because of a supply shortage. And again, building a building is much less supply chain constrained than building an aircraft. So bottom line, we've seen massive increases in real estate because of a lack of building. And I'm confident that aviation is going to have the same exact thing play out, but it's going to be even more exacerbated because you will not be able to add more aircraft to the global fleet. So this isn't like an issue that's going to go away in 2 or 3 years. This is an issue that's going to be ongoing for 20 years. This is a 20-year issue that we have set ourselves up for. And unless there's a new aircraft manufacturer that comes out, sets up a line, gets approved by the FAA, and delivers thousands of aircraft, I don't really see how my thesis doesn't come true.
No,
So,
yeah, I think that's unique. I was talking to some bankers a couple weeks ago, and they're like, "When does Boeing become investable?" I'm like, now. It's on its, it's kind of on its blind. But you think about, max production is down to under 30 aircraft a month.
mhm.
Airbus is producing, but everything that's coming off with a geared turbofan engine is sitting, so they're not getting delivered until those issues are done. But yeah, no, you're right, and it's not like you could turn that switch on and have a 60 aircraft max production
Can't.
rate tomorrow. You just don't have the people. I mean,
You
that's
you can't. You can't. And so bottom line is you will be in an aircraft shortage. I'm confident to say there will be an aircraft shortage 15 years from today because of the issues that started 5, 6 years ago. It's not a short-term thing. So bottom line, if we can go out and buy aircraft, it's probably going to be a bet that will work out pretty well from us.
I love it.
Well, actually, I remember interviewing with the board and actually put together kind of a presentation of here's what's going to happen in the aerospace aftermarket. And actually, COVID accelerated kind of what I thought was going to happen. Here are the gems in distribution and MRO that the business has that are underutilized. Here's how we can use those gems to start to build a market leader that's different than most things that you see in the market today. So we're not PMA focused. We are not the OEM like Boeing and Airbus, but we're a very OEM centric business. So think of people like the whole RTX family of businesses or Honeywell, if they need a partner who's not going to reverse engineer their parts, who's going to create kind of bespoke solutions to solve repair and distribution aftermarket opportunities for them and solve problems for their customers, there wasn't a real player with size and scale to step into that market. And that's what I came in looking to build off of the platforms that VSE had inside of the business today.
So you find you're partnering more with the OEMs?
Absolutely. I kind of described it as like a store within a store. If you walk into a big department store like 20 years ago, you just saw racks of clothing. You walk into a department store today, you see kind of mini stores that are specialized in different brands. That's kind of how we operate. And for each brand, we've got leaders who support that OEM. They know the product. We're very technical in nature. They know the products inside and out. We can solve problems with whether it's a repair solution, a distribution solution, a little bit of USM, and we stay away from PMA because again, we try to stick with that OEM centricity and partnership.
How do you feel? I mean, lots of changes in every industry. I mean, you're big DoD, commercial aviation, you got some automotive. COVID changed a lot of the world. As far as, now there's a lot of consolidation. Do you feel being in that $1 billion $1.5 billion market cap range, where you're a little bit more nimble than everybody else, and you're starting to see some consolidation. Is that helping you a little bit, or what?
Yeah, I think well, let me say a couple of things. One is we were too diversified when I got here. We had like a table with three legs on it. We had a defense business that was not integrated. We had an aviation business that was very much separate, and automotive business. That's where I am today. We have sold all of our defense business assets other than things that are very aerospace related. And we're figuring out what to do with our automotive business. But the aerospace business, has grown from just north of $100 million when I got here to this year we'll do about $750 million. So the growth has been very, very large. And this is where the future of the business is. I'd say from a $1 billion+ market cap, being very well capitalized, being nimble and agile, there's benefits to what that can bring to the market because we can move quickly. I'd say, but scale helps as well. I think you'll see us in this next chapter continue to scale the business and focus on, another phase of growth, but not losing any of that entrepreneurial spirit, that nimbleness, that agility.
What I saw when I first started was just a tremendous amount of operational and execution opportunities. MROs are, at least in their DNA, are not really designed around efficiency, especially when you're in a high mix environment and you have multiple aircraft types. It's not like we're a 737 MRO here. Right? Mm-hmm. This is like I mentioned, every day is a different day. So the biggest thing, given kind of my operations experience in a manufacturing environment and other commercial roles, is I just see lots of opportunity for standardization around work processes, documentation of how, work is done, parts kitting, things, really simple things is like, well, we should not be spending any time during the day using valuable technician hours hunting for parts. Mm-hmm. I should be able to reach out and grab the tools and parts I need from right where the aircraft is in the hangar. And so those are the kinds of things we're doing to really drive up our goal hour efficiency so that not only is our labor being highly utilized in productive work, but that particular labor hour is done much more efficiently. So that was the thing that kind of jumped off the screen, so to speak, at me when I first got into the role. Is I see lots and lots of opportunity there, and also we got to be more efficient. There's a lot of our competitors, a lot of others in the MRO world that would love to have our customers and love to do the work we do, and in today's day and age, you're only as good as your last maintenance event, your last engagement.
It's like everything. It's like anything in today's day and age, right? What'd you do for me yesterday?
Exactly. So, and that just links back to that, delight the customer bit. And so that's super important. So yeah, another thing we're working on behind the scenes is enhancing that customer experience and standardizing the way it's done at each of our sites. That was something too. And that really comes out of some private equity experience, having worked with businesses with multiple sites, is having that standardized experience for your customer really does enhance the brand when it's done properly. So that, there's an Elliott way that you're received, an Elliott way your aircraft is delivered. I think so. I see that as opportunity. And
what took you off guard a little bit and say, wow, I didn't expect this.
I guess what took me off guard was just how many planes were working at once. I mean, I'm really hardwired to streamlining and improving operations. But I think my early days, I just asked for kind of a briefing, if you will, or visibility on all the aircraft projects that are in work. And I think at the time we had 42 just here in Moline. And it had a project management team that's not a fraction of that size, and they're managing 6 and 7 projects a piece. So I'm like, all right, how do we keep all this straight? There's so many details here, and you've got an aircraft that's coming in for a full avionics, new interior, and a paint job, and in the process of pulling out the interior, you find a little bit of corrosion, and that backs up the flow for the whole machine, and so. I didn't have a full appreciation for that on day one. So that definitely, I'd say, caught me off guard. And, hearkening back to my days in engineering and project management, really had to kind of think about those fundamentals all over again and kind of use muscles I haven't for a little while. So we're investing quite a bit in the program project management, standing up a PMO function, to not only accommodate the number of projects that we have going on simultaneously, but also, working with higher velocity so that we're touching every plane every day. A plane that's sitting in the hangar or on the ramp that's not being worked on any given day is not generating revenue, and it's not making a customer happy, right?
Mm-hmm.
So, I'd much rather have the same level of effort at a very high efficiency working on fewer aircraft and just get them turning more quickly.
Yep.
So I'd say that was probably the biggest eye opener for me was the backlog of work.
And what's going on in the industry, what we're seeing is that there are a lot of little companies that were formed by entrepreneurs, owner operators in the, call it as low. I mean, we've looked at companies as low as $1 million a year of revenue, 1 million up to call it 5 million of revenue, maybe 1 million of EBITDA, that are going through a generational transition now. So, those owner operators are in their mid 60s, maybe early 70s, family run. So, the husband is kind of maybe the mad scientist, and the wife, maybe, bookkeeper / HR, 5, 10, 15, 20 employees. And, it's provided a great lifestyle for them. But now they're looking for an exit strategy, and, it's tough, because they're way too small for a private equity firm to come in and put the sweat equity that's really required for that company to continue to grow and thrive. So, finding an exit strategy is really kind of tough for them. So a strategic won't pick it up, a financial won't pick it up, but it's a perfect opportunity for an owner entrepreneur to put together an SBA loan or friends and family round and go and snap up these companies. It's a ton of sweat equity. You get in there and, they may be on QuickBooks, no MRP system. The owner may have a stack of drawings on his desk. No CAD system other than, maybe AutoCAD from 20 years ago. And, now you got to build a real aerospace company out of it. And, but with a lot of sweat equity and a little bit of luck and talent, you can start to build a nice company.
What was the biggest when you bought Skyox? It was very, small, family owned, individual owned. Biggest challenge. What was the biggest challenge when you walked into that thing? What did you learn right off the bat that you wish you knew from the very beginning?
How small it really was. And that's part of it. So we didn't get great financials. It was kind of a handshake deal. That one was a little bit different. We really just bought, it was an asset sale. We bought the product line, the brand. And Sporty's has been a great distributor for us on that. So we kind of re-energized the brand, and they've done a great job energizing the sales for that product line. But yeah, we had to kind of build it from scratch, rebuild it from scratch. So we bought all the assets and then kind of stood up Skyox as a product line within Aerox, kind of just by brute force. But fortunately, I mean, the advantage for us was that we had that infrastructure already. So somebody coming in not having that infrastructure, I'm not sure they would have been able to do it. But we already had the supply chain. We already had, the bills of material. We had the marketing. We had the brand and everything. So it was pretty easy for us. But somebody else coming in, I think, would have had a real challenge with that company. And that's part of the challenge with these small businesses is that, a lot of the intellectual property goes out the door when the founder walks out, either every night or cashes the check and walks away from the business. And that's a big challenge. And it's a big challenge for the industry because a lot of these small companies are key suppliers in the first and second tier of the supply chain. So, so a large tier 2, tier 1 company may be dependent on this small company for a key component that if they don't deliver, airplanes don't get shipped.
Mhm.
And, the owner says, hey, I'm retiring. And now you're left scrambling, either resourcing or doing something. So, it's an opportunity for entrepreneurs in very small companies to come in and kind of, be the hero of the day, take this small company that, really hasn't had any investment, modernize it a little bit. And, it's great for the entrepreneur because you get to run a small aerospace business and with an established customer base and established product line. And, it's not without risk, but it's way easier than starting from scratch.
What kind of due diligence are you I mean, look, it's very hard to do, it's hard to do a lot of due diligence, it's kind of
Yeah.
a, garage, it's almost a garage or storefront business that Bob started and,
Yep.
what kind of due diligence do you do and what are the resources that you bring in to make sure, hey, look, what do I really have here?
So, that's very, very difficult because when an investment banker is representing a larger company, they can invest in a data room, with 15 folders full of all of your HR information, all of your financial information. You can do your inventory testing,
Mhm.
quality of earnings. You can do everything that you need to do to do your due diligence, environmental.
Mhm.
Um, we don't have those resources available to me as a buyer. They don't have the resources available to them as a seller.
Mhm.
So, a lot of what you're buying is the integrity of the seller. And that's something that you just got to kind of go with your gut on that. Like, is this guy or
Mhm.
is this seller, is this woman, somebody that has run a good, trustworthy business over the last, couple
Mhm.
of decades? Are they trying to hide something? That's that's something you've got to really establish a rapport with. And so,
Mhm.
like I try to establish a rapport with the seller whenever I can, because that's when you kind of tell, okay, is this somebody I want to do a deal with? And that was, I mean, we've looked at deals where I've met the seller and I said, I don't want to do a deal with this person, and we've walked away.
Mhm.
Um, just not for any good reason other than I could tell that it was going to be a difficult transaction.
Mhm.
Um, and then this one, the sellers were great, very easy to deal with, gave me carte blanche. Anything, I spent a couple of days up here doing inventory testing, met with the team. They were very transparent. Still a lot of surprises, and we kind of knew what we were getting.
Mhm.
But you got to leverage your experience as a somebody who's run a business, bigger business for somebody else. You got to just leverage that experience and dig where you can.
I see kind of three big movers. One is what I call upgauging of aircraft. The aircraft are getting larger.
Mhm.
Even you take the Challenger 300 to the Challenger 350, right? By canting the winglets out, it grew by 4 feet in length.
Right.
You multiply that by the number of planes. These planes are just getting bigger, even if it's just aerodynamic changes like the configuration of winglets. And that's causing a greater need for more hangars and larger hangars. The delivery forecasts call for 17% more business jets in the next 10 years than were delivered in the last 10 years. And those next airplane being delivered are going to be bigger. So they're going to have to go somewhere. So that's the upgauging trend. I think the second one is you have tremendous growth coming on the entry level to expanding business aviation into eVTOLs. Over the next 10 to 15 years, we're going to see 6 to 10,000 eVTOLs enter the marketplace. And that will usher in an entire new, not only generation of people, but more people into business aviation. And then the third one that we can't lose sight of is sustainability. The industry is really coalescing around a number of initiatives related to SAF and other alternative fuels,
Mhm.
but also just more efficient flight planning, avoidance of contrails, things along those lines. There's so much the industry has done and is planning to do that we got to keep an eye on that in order to drive sustainable growth. We know the growth is coming, but let's do it in a sustainable way. So those are the big three trends that I'm seeing that will grow the industry both by size, but also the number of people accessing it.
Yeah. Joe?
And so from our footprint, a lot of our origin being out of Southern California, there's definitely a population density still there. And so, in terms of, Scott's, and the leadership team's endurance and hard work at developing the space there where we can kind of have some overflow from our headquarters. Really, Santa Ana is just a wonderful spot for us to be developing in. And so, we do have a number of customers down there, but being that it is definitely a mecca, they're in desperate need of that hangar space. And so again, instilling those 4 business lines into Santa Ana and continuing to expand what we have in our vanized footprint will continue to be an initiative we focus on. But from what the future holds for our company and growth of our fleet and our facilities, I mean, we'll just be honest, it's opportunistic, right?
Mhm.
And there's not a private equity set up behind our ownership structure, so we have to be thoughtful and pretty conservative about how we grow. It has to be done in a long-term view with discipline, and so that's the way we look at any of our new developments, investments, and it's important for us to make sure that we're just not making bad business decisions.